Everybody, welcome to your Monday edition of the TraderMerlin show. That's right, Big Ab. How about them Niners? I know there were 4 games this weekend, and the 49ers game was, without question, the best of the group. That was just such a nail-biter, statistically back and forth the entire game. Loved it. Thought it was a great game. Unfortunately, the Cowboys had to lose, so sorry for the Cowboys fans out there and the Bills fans. I was kind of cheering for the Bills. All in all, next Sunday is going to be a great game. So, yes, go 49ers. As you guys know, I definitely have 49er. I think I even have some 49er logo I can throw in there. There we go. I'll just make it flash just to annoy the heck out of Tom Barr and all you other Raider fans out there. All right, let's go into a couple different things. So we'll talk about the markets. I'll tell you about the options trade that I made today. I did put quite a few options trade on today. I did actually do some Tesla stuff. I told you I wasn't sure whether I would put my Tesla trades on today. But I did sell some Tesla puts today. I mean, talk about juggling chainsaws. Kind of a scary thing to do. But I'll tell you more about that in a little bit. We did a show on ChatGPT a couple weeks back, which for me personally, groundbreaking. I'm just like, thought it very innovational, and the way that it can be utilized in my world to help make my life easier, I love it. Of course, I showed a friend of mine over the weekend, and he's appalled. He's disgusted. It's a downfall of humanity. Okay, it is what it is. But that was just with text and digital stuff. I wanted you guys to notice the graphic today. So the graphic today, it says, bull market keeps charging. So a lot of the times what I do is I will just grab an image from Google, and I know that that's probably going to get me in a copyright violation at some point. However, I hope that you guys will appreciate this, but going forward, I'm going to do my best to create 100% original works of art that nobody has a claim to the copyright because I created it. This is one of those pieces of artwork here. Now, just so you understand what happened, there's AI generators for artwork now. So I put in all the variables that I wanted. I put in a gigantic black bull looking all evil, charging with his mouth wide open. And I got this graphic. And it is an incredibly awesome graphic. But I'll be playing a lot more with this over the next couple weeks, and I'm going to try to make it where all of the thumbnails for the show will be AI generated and all original quote-unquote works of art. Yes, I know the true artists in the crowd are going, that's not art. I'm just the prompt inputter. But there's some really interesting sites out there that if you guys are interested in this AI thing, play around with a couple of them. I actually spent money to subscribe to one of them because the pictures that I'm getting from this are absolutely incredible, unbelievable. Anyway, we'll stop there with my proud moment of my bull market here. Anyway, bull market keeps on charging. Now, what on earth is going on? We had that monster move on Friday, which of course had me drinking Blanton's on the show. If we keep this up, I'm gonna have some Pappy Van Winkle on Friday, going for the rare stuff. What exactly was fueling this? Why was it such a big move? Hey, Shayna, good to see you. You know, a lot of the stuff that we've looked at recently, especially some of the tech names, have been beaten down significantly. And you had some pretty big moves today in stocks like Apple. Nvidia was a big gainer out there. AMD. There were also some of these EV companies like NIO and Lucid, Tesla also having great days. So let's start with our top 7 and I'll work our way from the bottom to the top. Looking at crude oil. If you look at the crude oil futures here, you can see you've got a spinning top right at overhead supply. This is not really good. Much better than the latest one. I'll have all kinds of good artwork on there. So, we'll make it better. I promise. Oh, if it's for Bill, I'll pop you. Hey, by the way, have you ever had the Pappy Van Winkle Big Ab, the 25-year? I've had a bunch of different whiskeys, and it's funny because you could line up 30 different whiskeys in a row and go from the cheapest to the most expensive. And I can probably tell the cheapest one, but I don't know if I'd be able to distinguish once you got into the top 10, 15. I don't know. It's tough. I don't have that discerning of a palate, but, it's a status symbol, I guess. All right. So, this concerns me for anybody who's long crude oil. I am actually long oil. I have USO, but I've held that position for a while. I've been selling calls against it, which I did today as well on USO. But, you notice where we're at. We are right at an overhead supply zone. I think you all can see that one. And I'll draw the yellow box, which we have not done much on the yellow box front. Just for fun, I'll put it right in through here. All right, so that's that kind of overhead area that it's right in the middle of at this exact moment. And we could tighten it up if you wanted to, but just to give you the general idea, it's kind of smacking its head against this overhead supply. And there's multiple schools of thought here, right? A lot of people look at that and say, well, it's overhead supply, it should come down. I'm looking at it saying it's been there on December 2nd, December 27th, got into the zone, got back in there on January 3rd. We've been in there for the better part of 5 days. And the longer we stay inside that zone, it starts to eat away at that overhead supply. So while it looks bearish just from the fact that you're at supply, I could play devil's advocate here and say the fact that it's been at supply so many times makes you feel like it's going to rip through this thing. So I'm still going to hold my USO. I've had it for a while, so I'm not too concerned there. But I think for anybody who's not in oil right now, look at that yellow box and use that as a reference point maybe for a breakout trade. Because today's spinning top is a sign of no direction, even when we had great direction in the market. So I would wait. I'd wait for it to get above. Let's give you the numbers here for it. Looking at a range, let's call it $80.38 to $83.37 is the range there. It's a $3 range, and we're literally dead center of that range right now for anybody who might be interested in that play. So that was down 0.04. Call it unchanged on the day. Moving into precious metals, gold continuing its nice move up. Again, I still think we're headed to 2,000. You're up $4 today, or 0.23%. 1932 is where it closed at, and there's that $2,000 mark, which is I'll probably want to put a line on there so we all can see that one. There's your $2,000 mark on gold, which I think we will hit it sooner rather than later. Now, I also was trying to sell. I had an order in for 40 puts today to sell 40 puts on the SLV. And I did that earlier on in the morning, but I just missed it. Like I tried to sell the 21. You guys can see here the 21 strike price. It got there. It hit it and started to rally off of it. I can show you the intraday. Fortunately, I just wasn't paying too close attention at that time. I was focusing on my Tesla trade at that moment. As it started to rally back up, I'm like, you know what? I will sell the 21 strikes. And I was looking at the market at the time. I guess I got a little bit greedy out there, and I just did not get executed, which is unfortunate because I really wanted to sell some puts on silver. I do think silver is going to be going higher, as is gold, and the rate of return for me selling that silver at 21 puts back here was roughly 2.5% for the next 30 days. Totally fine with that as a long-term holder of silver, but I did not get filled on SLV. I am currently in no silver. Just full disclosure on my trades here, right? None of this shoulda, coulda, woulda. I'll draw a line on a chart and say I'm in something. I'll tell you what I'm in, and disclose it. So that's your gold. And the good news is we start to move up here from the index perspective. Now, they weren't the top 4, but they're in the top 5. Here is your Dow futures. That's a 5-minute. I'll go to the daily here. Dow futures continuing its 2-day run, but still down over the last 5 days overall, right? We were up at 34,500 on the Dow, dropped all the way down to just about 33,000. And now we bounced up to 33.7. So it's a great bounce, but as far as the indexes go, it's the least exciting of them all from a percentage gain move, in my opinion. I know we got some Dow fanatics out there, but for me, not liking what the Dow picture looks like at this moment. Russell 2000, much better, right? You had a 3-day sell-off that looked really like almost apocalyptic. I thought we were going to go just a hair lower on that one. We did not. And now all of a sudden, you've gained almost all of it back in just 2 trading sessions. A similar picture to what we saw when I was looking at that crude oil, right? You've got the kind of the supply zone in here where it's been tapping its head against over and over and over again. It looks like it's poised for a breakout. Really going back into last October, higher lows, same highs. That's the definition of an ascending triangle. So keep your eyes on that one as well for a potential breakout. But you want to wait for confirmation of that breakout. That confirmation will come as we get above 1920 on the Russell, which is up 1.19% today. All right, podium time. S&P 500 is your third place finisher. I guess the great news here for anybody who is bullish, and I do have some bullish plays. I am still long on some QQQ, which I have. I'll tell you about that when we get to the NASDAQ. We've technically broken that triangle, right? We've drawn this symmetrical triangle in, or a pennant formation. Statistically, it will normally break in the direction of the prevailing trend, which is down, but notice what happened today. We ripped to the upside, and we closed above those most recent highs that we achieved on the 13th of January and the 17th. So this is starting to look much more positive for the S&P 500. Now, if you had like a teeter-totter, right, of it's going to go up or go down, I've kind of been straddling that the middle of the teeter-totter and just riding any little fluctuation because don't really know. When this move happened today, that kind of starts to tilt you more into that bullish camp where you're going, okay, it looks like we've broken out. We're starting to see some technical issues that could lead to more upside potential. Now, granted, that is just pure speculation. It's just going off of what the charts are telling me. There's a lot of other macroeconomic pieces and some technical stuff we could look at that may conflict with that opinion. But right now, that's how it's shaping up. This nice little move today. Tomorrow, I'm very interested to see what the follow-through is on this one. You notice that we were really strong most of the day, and near the end, didn't really have the oomph. I'll bring the 5-minute on here. Right, it just started to give back some of that. Yeah, it traversed up here, but right as we got into 10:45 Pacific time, it really just gave up a lot of those gains, and that was probably I guess just some profit taking overall. But all in all, still a very nice positive day. Chase says SPY still below the trend line. Futures telling a different story. Yeah, if you go to SPY, yes, that's true. Very true. Let's go. I don't know why I have that labeled like that. Collected 1%. Let's go all the way back out there. We'll draw that trend line that goes to the top and clip on these. Oh, I don't know. Actually, if I start at that peak and go 1, 2, 3 points for confirmation, we've broke above that a couple times. So I don't know, Chase. I might actually disagree with that. Just if we go off the peak that we had here back in January, right? I think you can all kind of see that. I'm going through. You're supposed to start at the peak, then you go in and you look for 2 points for to make the line. Third point is confirmation. So at this point right here, you have I hate to sound arrogant, a perfectly drawn trend line because it goes through the peaks. Now you might say, well, it's got to go through the bodies, but that's going through the peaks. Here, we hit it, respected it, sold off. We gapped up above it, so we haven't really had a close above it until today. So yeah, I would actually say even on the SPY, we have broken above that. And is it convincing? I'll give you that. Is it a convincing break? Like, oh man, here we go, all-time highs? Absolutely not. I do not think that's going to happen. But in looking at this chart of the SPY, does this break above 400, which again is a fairly big milestone number? Does that now put this 408 into play? And I know we got a lot of futures traders here, so let me go back to 408. In this case, it's going to be 4,100. We're at 4,036 right now. Well, if the 4,100 is back in play, which would be this line right up here, that's another 64-point move. Today was only 48 points. So that looks to be another 2% possibility. Could we get there this week? Sure. We absolutely could get there this week, get to this 4,100 mark. Remember that the big looming piece in this market, which is going to create havoc one way or another, is going to happen Wednesday. And that's going to be Wednesday after close with Tesla. So Thursday morning session might be that changes everything. And by the way, you guys know we have a lot more big companies reporting earnings. Within this week and next week, you've got all the FANG stocks: Apple, Google, Amazon, Meta. I mean, the list is just huge and a little bit scary. Those are the types of weeks where you kind of want to back off just a little bit, because remember, Microsoft reports tomorrow. Yeah, Microsoft reports tomorrow. Tesla is on Wednesday, and Microsoft is the second biggest weighted component in the NASDAQ. So if Microsoft were to miss tomorrow, you could see big, or if they beat, right? If Microsoft has a huge day tomorrow, and real quick, let's take a peek at Microsoft here. Microsoft really hasn't had much of a recovery compared to some of the other FANG stocks, right? Thanks, Tobe. And I'm not a huge fan of Microsoft, but that doesn't matter. My opinions on Microsoft don't matter at all. Given where it's at, it really hasn't had that pop up. Now, again, tomorrow they report earnings after market close because it's a NASDAQ stock and they generally report after market hours. That'll be our popcorn trade today, and it could absolutely have a huge impact on this. If Microsoft beats, the NASDAQ is going to hit these overhead highs, going up to 12,100 probably tomorrow. Right, that's another 200-point day, so you're looking at another 2% move if NASDAQ has blowout earnings. If they miss, then you could end up challenging some of these most recent launch points that we've had in the NASDAQ. So caution, extreme caution this week. Be very careful. I sold. We're on the NASDAQ now. So here's your NASDAQ 100. I sold the 295 puts on QQ, or 295 calls. Excuse me. I'm long the QQQ, and let me get all these lines off here. Love it. We talked about this consolidation. I love revisiting things, and the veterans that are on this show know when we talked about this. When this chart was here, we drew that yellow box between the high and low of the day, right? You guys might remember that. We drew the high and low on this candle. This was on Thursday's session, and said, look, it's just indecision. So the simple way to do it is if it opens inside that yellow box and moves above 277.38, go long. If it opens in the box, it goes below 273.89, go short. hallelujah. I hope some of you jumped on that one. That has been a beautiful, beautiful trade. So I have the 295 calls that I sold, which basically means if it gets above here, I'm okay to let it go. Now, that was a really nice play because it was a 295 call. I actually did that for the February 17th expiration. So I'm going out 30 days, but I also got $4.95 worth of premium on that one. So that was, that's pretty good. That lowers my dollar cost average. I've done this for 2 months in a row where I've collected about $4 on premium per expiration. So now my dollar cost average is down around that 280 mark. So 280-ish. So all in all, fine with me if it gets taken away at 295. That means I still get to keep all the premium that I collected for the past, 3 months? 3 months, I think. But that's where I've got my target. And you notice right where it's at. It's right near those highs of the overall, since going back into September of last year. So for me, I think 295 is probably a good target for the Qs. Will it get through that? Given this current trend, most likely, especially given all the FANG stocks we have reporting this week and next week, if there's good earnings, we'll blow through those 295s. But you know what? I'm not trying to be greedy here. I'm just trying to make sure I get my my defined percentage rate of return per month that I'm shooting for, and that should definitely do it there. So that was your number 2 position, was the NASDAQ. And lastly, crypto, Bitcoin. Man, it's been just a wonderful, let's get off the futures chart so you guys can see a real chart. Futures don't trade 24 hours a day, 365 days a year, but these charts do. Really good news for anybody who's bullish on crypto. I did not expect this to happen. As you guys know, I was expecting a pullback to that 19,000 level on Bitcoin here, and we've just ripped up on Friday. Over the weekend, we continue to drift up, and now it looks like we're edging even higher on Bitcoin. So pretty happy to see that. Obviously, I've got a vested interest in that thing staying above 23,000, so keep on moving to the upside. Joe Frank says, a lot of crypto hype as of recently. What signs can we really trust to get bullish again? Well, I don't want to make this a full crypto show, but if you look at the mainstream headline news here, the main reason, at least from my perspective, on why this is going to surging and probably continuing to surge is because what's his name, John Ray, the CEO of FTX, the guy that took over for Sam Bankman-Fried, and is now, trying to right the ship and figure out where all the bodies are lying. He's basically said, look, we could start this company up again because the assets are here. It's a legitimate, seriously good company. It just had some idiots running it. So, this renewed a lot of confidence from the crypto markets because the liquidation of FTX itself could create a huge amount of selling pressure in the marketplace. So that's why a lot of the crypto enthusiasts like myself are a bit fearful, because if that comes to market, you could see a lot of further downside movement. But if there is no liquidation, if the court says, are you sure you can get back on your feet and you're sure that you can function, and this guy says yes and leads them to prosperity, then all of a sudden it's like this huge looming negative weight in the whole world of crypto that alleviates a lot of pressure. Now you still have Genesis filing for bankruptcy. You have several other crypto companies potentially filing bankruptcy, but this is a big one, right? The FTX not going bankrupt rumor or the thought of it could potentially cause a big move. And I think you've seen that here. This whole move wasn't because of that, but I think that there was a lot of this move that was, right? I think this is just markets oversold, Bitcoin breaking out of a trading range, making some new highs. People start jump on that ship. You can see when it broke the high from December, it just really went parabolic. Hit supply level right around 21,334, sold off for a couple days, and now is ripping again. So I think a lot of it is pent-up frustration. I'm a lifetime bull on certain crypto. Yeah, me too, Big Ab. On certain ones, right? Out of my portfolio of 39, there's only 2 that I'm like, they're going to be there in 10, 15 years. There's no question in my mind. I've got another 5, which I think are seriously good contenders for being around in the near future. And the rest are, maybe, I don't know. We'll see. We'll take a stab at it. But yeah, I've got the 2 biggest positions are the ones I believe in the most, and we'll see what happens. Yeah, Margaret says Bitcoin futures gapped up. That's why I don't look at Bitcoin futures typically. Bitcoin futures, they're closed over the weekend. You're closed Saturday, you're closed half the day on Sunday, more than half the day on Sunday. If you look at these charts here, when it looks like a currency spot pair, you have the BTC USD, that's 24 hours a day, 365, no breaks ever. There you go. Yep, Big Eb, you and I are in the same camp. Tom said BTC is lifting well in the halving cycle. Have I ever mentioned yellow boxes on BTUSD? Yes, you have. Many, 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 many times. What do you want to hear, Sheena? What did you put in there? Your buy FSR? All right, let's look at that here in a little bit. Hold on, let me get through this other stuff first. So, as far as overall markets, we have to look at the graphic that I created today, which, again, I love the graphic of this bull. He's kind of, I don't think bulls really have fangs like this one does. But, and he's got kind of a crazy horn structure. But if this bull market keep going, I'm curious what you guys think. My gut tells me we're due for a little bit of hesitation here. We've had a pretty strong run. I believe the last 10 sessions were up about 10%. In the last 2 sessions, Nasdaq's up over 5%. I mean, these are really big moves. And maybe it's just pent-up optimism. People looking forward to the Fed next week, coming out and saying 25 basis points and what they might talk about going forward with Fed funds futures and what those rate increases might be, and maybe even pivoting. I think that's part of it. But I still think we've got a big dark cloud over our head, and that is the issue of inflation. It's dropping, but inflation's dropping because retail sales numbers have been plummeting, right? People just aren't buying stuff. And retail sales numbers are plummeting because people have extended themselves too much. They're not getting stimulus checks, and now it's like, okay, I'm not going to spend. And then retailers lay off. So there's that. It's a trick. I'm not really sure which side we're on. As Zed says here, hope not a bull trap. And I wrote that in the description today. I said, is this a bull trap? I don't think it is. I kind of feel like and I mentioned this on the January 1st show, I think the first quarter of this year is going to be bullish. I think January, February, March are going to be bullish. Not extreme bull. I'm not talking, 100% rates of return. But, maybe we do get a 15, 20%, 25% pop in the equity markets January, February, and March. And then I think the impact of the layoffs is going to start to hit. We still have some lagging from the Fed funds increases that have happened. I still think that has not really impacted the markets. And it's like we have this little window of hope right now where we're going to get a bull market. But I do think we'll start to sell off a little bit more towards the end of the year. But that's just an opinion, right? Like Shmev, I love he prefaces it with my opinion. And everybody here's got one. I've got 70 people in here. You're all got an opinion on it. Shmev says, my opinion is the FUD is gone. It's all up to earnings at this point. It's all up to earnings, but I think more important, macroeconomic data. If we start to see really bad GDP numbers or really bad CPI numbers, or any one of those metrics comes out horribly out of line, then all of a sudden all eyes are going to turn back to the Fed, and what are they going to do? So, yeah, earnings are definitely going to be a play for it's earnings season, right? This is it. We just kicked off 2 weeks ago. Big names are starting to roll out. So there we go. Let's see. I really want to go short, but afraid of a technical squeeze coming to trap the shorts. And Chase, it's okay to be afraid. The easy thing to do is to not trade or just cut back your skin in the game to a very small amount, right? Markets where there's so much uncertainty are rather difficult. The markets between 2011 and 2017 were not really difficult. You just bought something and held it until the market told you not to. Right now, the markets have been telling you, short it, right? At least going back to the beginning of the year. Sorry, not beginning of the year. Go back out here so I can look at the chart. Going back to the or the tail end of 2021, the markets have been saying, stay short. Right? Now, granted, we've had some big swings. We've had some big pullbacks along the way. And right now, this chop is what makes it so hard. We will get a break one way or another. I have a feeling, as I mentioned in the first of the year, I think it's going to be a choppy year. I don't think we're going to get any real clear direction. I think we're going to get lots of, moves to the upside, moves to the downside, but no real clear direction, which makes it very challenging for longer-term swing and investing. Tom Barr says, I don't feel like the economy, aka the real world, is doing well enough to merit a bull market. Well, and I agree with you there, Tom. However, there's also the belief that we may have sold off too much when the market, when the global economy hasn't really painted that bad of a picture. So I guess it all depends on which economist or market expert you talk to. They're all going to have differences of opinions. And, Tom, you've been around enough traders to know that at this point, you kind of have to turn that stuff off. Like, I have my opinions, and sometimes I feel bad because I'm not here to sway you guys at all. This is a platform, honestly, for me to just kind of get my thoughts out there, and if people like what I have to say, great. If you don't, you're always free to not listen and go to another channel. But, I certainly don't want to sway people. I want to make you think. I want to make you think on your own. And if, Tom makes a good statement. He says, I don't feel like the economy, aka the real world, is doing well enough to merit a bull market, then right away, your strategy, right, should be looking at supply zones and saying, okay, what's my time horizon? How do I play this to the short side because I believe there's more downside move coming based off of your assumptions? Whereas right now, I'm looking at the opposite. I'm looking at, okay, where are my buying opportunities here? Because it feels like we're starting to break some highs. But if I'm wrong, I have to, cut my losses, go to pause for a second, and then regroup and figure out what's going to happen. But choppy markets suck. What would happen with bad economic data but good earnings? Hell if I know, Shmev. I mean, honestly, you've seen it recently where you have a company have horrible earnings and their stock's up 30%, or the same day a company could have amazing earnings and they're down 30%. So I don't know. Earnings are always a crapshoot, and I believe that earnings are probably the most rigged economic trading game because they lower the bar, the expectations number. So when you hear that they beat or missed earnings, wow, who cares? A company may beat earnings, but they lowered their forecast 90% over the quarter. So wow, they beat earnings, but they dropped 90%. So you always change the goalpost, right? Like an extra point in the NFL is an extra point. It starts at the same point, but the way that earnings work is an extra point it could be anywhere on that field. So it's hard to make that a statement about what's it going to be and how they're going to react. Feelings versus the reality of the chart. Yep, chart's the most important part. Let's see. Well, I said S&P 5400 in the S&P, so I'm all in on the bull. Yeah, Michael, that's a very strong bull. I mean, if you're all in on that bull, I wouldn't go all in, my friend. I'd hate to see you get burned on that one. I don't see it being that bullish. I mean, if you want to go all in here, you're basically telling me that this market's going to have a 34% rally this year. I don't see any clear sense of direction that could cause that. I see too many small pieces that could push it up and small pieces that could push it down, which means net chop. Now, if all of a sudden we started to see GDP numbers increasing, we start to see unemployment numbers declining. Oops, that's not it. That's not Scott McCormick. We start to see GDP numbers increasing, inflation continue to drop. We see the dollar declining. You see all these positive factors. Yeah, sure. Then maybe we do get that 5,400. But I don't think we'll get there. But that's just me. My plan might be very different than yours. Ganesh, isn't the tech layoff a sign of the company is not doing great? Will the earnings come below expectations? So that's a trick question, Ganesh, because one of the tactics for a corporation, and I'm sure we have some people in here who have been part of this process, if you've got a big company and you have economic growth, right? The economy's doing well, you're hiring like crazy because you're forecasting expansion at a much higher level, right? So you got to be bringing in tons and tons and tons of employees. But as that market starts to curve and slow down and the growth expectations are not there for your company, then what do you have to do? You look through your company and you don't just fire at random unless you're a stupid CEO. You go through and you fire the ones that are not producing more than you're paying them, right? So if you're getting paid $100,000 a year, you better be making, $200,000, $300,000, $400,000 a year for the company. They'll start weeding out by that one first, who does the best job, etc. So if you have these companies laying off, it's a sign that they're forecasting economic slowdown, but they're also trimming their overhead significantly, which could allow them to beat earnings next quarter. So just because they're laying off doesn't mean they'll miss earnings. Yes, it's a sign that things are slowing down, but are they making enough overhead cuts with employees to offset the losses from consumer demand? That's the big question. Reality will never pull overvalued equities to reality. Examples are Zoom, will eventually. Will eventually. Absolutely. Yep. I mean, heck, I think it was early 2021. We saw that huge move up in Zoom, and I was actually on Sam Evans' show, and he's like, "What's the one company that you would short right now?" And I said Zoom, and he's like, "Damn it, that's the one I wanted to short." I'm like, "Yeah, there's no reason for this thing to be up at these elevations. It's already got the hype." But you're right. Eventually, reality will come in and take care of that. You look at one of the big things. You guys see Citadel. Citadel just made like record numbers of money off of investments. You know why? Because those idiots on Wall Street Bets and those morons on the Reddit chat rooms are out there trying to do a short squeeze against Citadel. So yes, Citadel lost like $5 billion in the short squeeze, but they were already short something like AMC at $20. And now they're shorted at $100. They're going to make a lot more money. Yeah, drop in the bucket with that $6 billion loss, but they'll make $50 billion on the next leg down. Stick it to the man, Wall Street Bets. Stick it to the man, Reddit. You guys are amazing. The power of buying your 10 shares of AMC collectively. Yeah, you guys are awesome. My Tesla play today, pretty simple. I right at the open, about 10, 15 minutes into the market, let me go Tesla. I only did 5, so I didn't go overly heavy. These are my old lines. Let me get those out of there. I'm long-term bullish on Tesla, so I'm okay owning Tesla. That's the basis for this. So I was looking at a level where I'd be okay owning it, and it's just kind of right below these most recent lows. Oops, come on. What's going on here? There we go. So I wanted to go even lower. I was going to go down to 124, but 125 just was a fine, easy number. It's also the origin of this gap right here. So it's still very, very risky. I did the 125s this morning. I sold 5 of the 125 puts. That netted me about $2.05. Now, the 125 puts at 205, that is a rate of return of 1.5%. And 1.5% by Friday. So I sold the Friday puts. And the reason the premium is so high is obviously their earnings are going to happen Wednesday after market hours. So the worst thing that could happen to me is all of a sudden Tesla opens up at $100 off just colossally bad earnings. I don't think that would happen. So I've collected 205. So let me put a horizontal line down here, and we put this at let's see, 122.95. Why didn't it put it up? That's weird. I must have typed the number in wrong. 1 second, let me change this. 122.95. Okay, so that blue line represents what my actual cost is. So if they report earnings on Friday and it gets below 122.95, I'm in a losing position. I'll just start to sell the calls at 125 again, depending on where we're at. But that also, just so we know, that is to right here. I mean, I have 4 more days. And it would have to fall. At the time, it would have been a slide of about 9%. Now, it would have to fall from current levels about, I think it's like 14%. Let's go. It's 13% slide. So Tesla would have to drop 13% from now until Friday to get back to my strike price. Where it ends up costing me money is if it drops more than 14.5%. So that's the play I'm making, Big Ab, and it's very risky. Like, I really don't recommend anybody do that one today. Fortunately for me, I got good premium because I sold them this morning. Now the premium is going to be a lot less. You can tell it just was rallying all day, so the premium that you would get for the 125s is much lighter. But I think 1.5% for the week is pretty decent for me. It's not a lot of money being put online. I think it's about $65,000 worth that I'm committing to it. But I'm fine. I'll take that rate of return, and it's risky, but I'm okay with it just because I do think that Tesla in the long run will go. It's starting to move up. I think you'll probably have a pullback, which is fine with me. If I get that, I'll sell the 125 calls against it and get a lot of premium there as well. So there you go, Big Eb. That's the Tesla one I made today. The only real ones I did covered calls on my QQQ. I did the Tesla, and I was trying to sell some silver, but I could not sell those silver puts. Bummer. I got SLV. Oops. Huge move in silver today, and I was actually looking to sell those 21s, which are right here. I think you can all see why. I mean, it's where it's been above 120, or sorry, 120. It's been above 21 for quite some time. So great, let's pick at it staying there. And this morning it started off and just ripped down below it, started to come back up, and I put an order with a limit that was on the ask side to sell these puts, and unfortunately I got a little greedy, and it just didn't hit me. Got within a penny of my strike price and just ran away the rest of the day. So unfortunately didn't get that one, but that was also going to be a 30-day play. There you go, Big Up. Those are the ones I made today. I just didn't see a lot out there, as you guys know. As selling of puts, I'd rather sell puts on a big down day. Didn't really get that today, and I don't sell naked calls. So unless I buy the underlier and start selling calls against some positions, maybe a week or so before I start to do anything. Is the dollar index due for a bid? I mean, I don't think so. I mean, look at the chart. It's just been drifting and drifting and it really hasn't had even one really exciting day in a while. It's just been slowly drifting down. Now, you could argue that you're coming into this area that goes back to May of last year as being a demand zone, or at least maybe where it could slow down and potentially bounce. Yeah, I think that's a spot. I think more likely is you'll see it drop to 100. psychological whole numbers. If it does get to 100, this declining dollar is part of the reason why you're seeing these equity markets do so well. The more that dollar falls, the better it is for the equity markets. So anybody who's bearish right now, you're hoping for a bounce, right, in that dollar index. But the bulls, the trend is your friend until the bend at the end. That dollar index, it broke that trend line back in November of last year and has been selling off ever since. So until the dollar turns, that's definitely adding to my bullish thesis on the overall markets. So is it due for a bid? I mean, I think you got a couple decent demand levels, Chase, but I don't know if I could say, is it due? We could look back at this uptrend, and make the comment at certain points. Is it due for a big pullback? Well, it's had a few of them, but just kept on going, right? If we do get find a bid here, where are you going to see the bounce to? If it hits 101 and bounces up, maybe you get to 103, but that trend is still down, and it feels to me like it's going to continue. I don't really see anything that's going to pull it out of that ugly downtrend that we've got going on right now. All right, so I'm going to, Ganesh, since you're here, I'm going to answer or ask this question, or try to answer this question, excuse me. I'm not the expert here, Ganesh. I don't really trade bonds. If I do, I bought some I bonds. I might trade ETFs. But Ganesh says, I have a question for bonds. Like we invest in other developed emerging countries and stocks, is it possible to invest in bonds of other developed emerging countries? If you do, what are the other country bonds that you recommend and yield for those? I'm looking for bonds which are slightly riskier than American bonds, at the same time less risky than stocks this year. So I think it's a tough one. I personally would not be trading bonds of another country because I don't understand the politics and all of the issues going on in those countries. If you are going to trade internationally, I would stick with the major developed countries. I would stick with, England. I would stick with Japan. Well, not going to buy Japan bonds because you get no yield. Stick with the European Union, Canada, Australia. If you start to look at things like, Turkey, at one point, I don't even know what they're offering right now for yield, so I'm claiming ignorance here, but there was a point where Turkey was offering over 11% yield. And I had friends going, man, I'm going to park some money over there. It's like, well, yeah, but you're parking that. You have to buy a Turkish bond with Turkish lira, which is hyperinflated. So the value, you might get 11% rate of return, but your Turkish lira that you bought to buy those bonds is declining at an alarming rate. You actually end up losing money out there. And remember, let me ask you this, and I've got, 80 people in here? You guys all type in what you think your answer is. Why would if the world, and let's use the America as the benchmark, right? So if you say the benchmark on the 10-year right now is, we're at 3.5%, right? Here's your 10-year chart. Let's call that kind of the bar for the world. Why would a country be paying you 10%? You buy their bonds, you're going to get 10%, but hey, if you bought an American bond, you only get 3.5%. Why would they offer you 10%? What do you guys think would be the reason for any country around the world to offer you 10% or higher on their bonds? And I'll just wait a couple seconds. I know there's an odd delay, so I don't want to have dead air time out here. The reality is, even as screwed up as our government system is, and idiotic as our Senate and House of Representatives are, I know I'm harsh on my politicians. I know some of you aren't as bad as me, but it's a sign that we still are the most dominant economic force in the world. Tom says no demand for their bonds. Not necessarily no demand. It's a slight combination, but it's the risk. They have to pay you so much more because the risk of your money either being subject, in the Turkish example, to hyperinflation or a defaulting government, a crooked government, that's why they'll pay such a high rate. So, Ganesh, if you're buying into these developed or emerging markets, be really careful. You can be enticed by those really high rates of return, but is your money really safe? Does that company default on those bonds? Are you going to lose to inflation because they have hyperinflation? Those are big considerations, at least in my mind. Yeah, Mark says they're desperate. Yeah, they are. And that's why they're going to be paying you 10% yield. But it's also risk, right? Supply and demand, and it's a combination. You guys are all right? Tom's correct with no demand. Because let's paint that picture of Turkey. And I apologize, I don't really look at international markets right now, but I just remember Turkey had they were paying 10, 11%. In that example, Turkey's paying 11% because they're in trouble, right? They need money. And actually, at the point, they wanted people to keep holding Turkish lira. So they're enticing people to buy Turkish lira, to buy their bonds and get this yield. But it created hyperinflation. To me, they had lack of demand for their bonds. Nobody wanted the Turkish lira because there was inflation issues. So they were raising their rate of return. So do we have any takers? Any takers? And it got so high that it started to bring money in. So yeah, there was no demand. You create demand by offering a incredibly high yield. But you can only pay an incredibly high yield if you're like on the edge. I mean, how are they going to make that? They're going to be printing more money to pay that yield, which further exacerbates the problem that Turkey was in. Yep, I agree, Margaret. You need an expert to trade those bonds successfully. Well, I think it's not necessarily an expert, but you have to understand you cannot get a higher rate of return without taking a higher rate of risk. Fundamental in trading, there is no way around that, right? There's things we can do to mitigate our risk, but if you're going to take a bond product and go through 5 different governments around the world, one's offering 3%, one's offering 8%, one's offering 20%, most people are going to jump on that 20%. But you know that there is massive risk with that. There has to be. Otherwise, you would go to the safety of the one that's paying 3.5%. Let's see. Yep. Liquidity is just a factor of no demand. But I love that, Mark. I love that they are desperate. Yeah, they are. iShares has an international. Yeah, so there are a lot of international bond ETFs, and that's really, I'll be honest, the only way I'm going to touch them. I would never go to the Turkish Treasury Department and go to their treasurydirectturkey.com or whatever it is and buy bonds there. I'm only going to be using bond ETFs. Just easier that way. Let's see. What did Blue Diesel say? Sounds like crypto liquidity pools to me. I would argue that that's even more dangerous, Blue Diesel. Crypto liquidity pools are so transparent that anybody with the smarts can see liquidity issues and create havoc. You can create all kinds of problems because of the transparency in crypto. All right, so Ganesh, I know I didn't answer your question, and I apologize, but I don't mess with international bonds. If you are going to be out there, and part of it is maybe want to support a different country, that's great. Just be very careful, and don't be enticed by those higher rates of return. Always think of the risk associated. Why are they paying you more on your yield? I bet there are great bond rates in Venezuela. Yeah, Argentina probably too. Let me real quick. Let's see. I've never looked this up. Let's see. We know Argentina is having a major inflation problem, right? So bond rates in Argentina. Let's go. How about an average bond rate in Argentina? Oh, it didn't. It's just Treasury Direct. I went to the wrong one. 1 second. All right, real quick. Let's see what we got. Oh, there you go. There you guys go. You want to go? You can go down there and get 75% central bank rate. You guys can get a 1-year bond in Argentina and get 69.23%. Sign me up. Woo! 69%? Man, that's worse than Shiba Inu. 1 year. So you can buy a 1-year bond and get 40.45% rate of return. So, Ganesh, this is where you look at that and you're like, man, that sounds awesome. I get 40% rate of return. Yeah, because their inflation is, by the time that year is done, you will have lost money. So real quick, let's go see Argentina inflation. Oops, I can't even. Trying to talk and type is a very tough thing. Let's go look at the Argentina inflation rate. Now, I know it's not. Here you go. Panelists expect inflation to be 90.5% by the end of 2023. So you can buy a bond that's paying you 40.45%, but the inflation rate is 90%, which means you'll lose money on that bond. There you go, Ganesh. Always look at the inflation rate for the country before you start buying those bonds. That's an easy one. Anyway, I can go on and on and on about that one. All right, it's quarter till. I have to run. I got stuff to do, so I will. Just got back from Buenos Aires. My instructor wanted to be paid in silver rather than. Yep. You know what? I've heard so many people. My dad went to Argentina, and he said that there's like people on the black market that are looking to buy your $100 bills because the dollar is a store of value. Yeah, we see it move up and down, but nothing like the Argentine is Argentina peso, ARS? Crazy stuff. Yeah, you only be down 50%, Big Eb. No big, but you got a 40% yielding bond. I taught a class years ago, and I forgot. Some guy was in, some dividend paying stock. And he's like, oh, I bought this because I get, it says I get a 10% dividend per year. I'm earning 10%. I'm like, you do realize, this is probably like 2008. I go, you do realize that your stock is down like 75%, and you're bragging about a 10% annual dividend. It's a fool's errand. Don't be lured in by those rates of return. Anyway, sorry. I might be able to do that on a different clock, Ganesh, but I don't have access to all that stuff. I mean, this takes me time to type it up. It's better if I prepare all that stuff and do it. So maybe down the road we'll look real quick and just do the same basic thing there with the Chinese, Indian, and Indonesian markets. Okay. Was he? Yes, he was an old guy. Yep, he was an old guy. And and again, this is important because the older you are, the more you do need to start thinking about income streams. So for him, he's going, hey, I'm getting 10% dividend payment. I need that to maintain my lifestyle. Yeah, but you're down massive on your holdings. Anyway, one last question here from Les. So I have a question about volatility in the markets. I understand about the opening time, overnight orders are placed. A little later, institutions place their orders, and by about 11 a.m. Eastern Standard Time, the markets settle down. What is happening between 3 and 4? Great question. So let me bring up TradingView here. We will go into, let's just go Microsoft, right? Just because they're reporting earnings tomorrow, and I'll show you all that. We'll go into a 5-minute time frame here. I'll add volume at the bottom so you guys can see what typically happens. You can see you got the big flood of volume. By the way, the golden area is pre-market, before the market opens, and the little blue area is after market closes. So that's the after-hours session. This is the 23rd, so this is last Friday. You can see in the very beginning of the morning, real big high spike of volume. And you're right, Les. It's institutions that have orders have come in overnight. They're lining all those orders up and kind of building their portfolio. And then they're sending all those orders to the market. So you get really high volume at the beginning, and then it kind of flattens out. And your question is, well, what happens that last hour? Why do we see it surge like this? Well, this was an eye-opener for me. When I started day trading back in the late 90s, everybody told me, from my professors to my financial advisors, everybody in the financial world was going, do not day trade. It's for losers. Day trading is for losers. The reality is almost everybody on the floor of that Chicago Mercantile Exchange, like active real-time traders, are day traders. They want to be out by the end of the day. So part of the reason you see this volume is a lot of people getting out of their positions for the end of the day. And there's also mutual funds. So anytime a mutual fund is sold, let's say I'll put a vertical line here on the chart. Let's call it right here, middle of the day, this big blue vertical line, right? Let's just say, and this is not a mutual fund, this is Microsoft, but let's just pretend that mutual fund is trading at $238. And you're like, I want to sell it. So you log into your brokerage firm, you say, sell this mutual fund, and what happens? Nothing happens because you cannot sell a mutual fund during the trading day. So when you hit the button, price was right here where this crosshair is, right? That little crosshair of blue, that's where it was. But the price that you're going to get filled at is at the end of the day, the top dash blue line. So in this case, if you sold it, you actually made some money. It's called NAV, net asset value, and it's basically priced once a day. Mutual funds are priced at the end of the trading session. So it could also be mutual funds seeing the redemptions that are coming into their mutual funds, unloading a certain amount of positions to accommodate redemptions. So you have big institutionals driving that with redemptions. You have traders trying to be flat by the end of the day. And then my conspiracy theory, tinfoil hat Merlin says, it's also, in my mind, people building positions for the day based off of insider trading knowledge they have about earnings announcements, about economic announcements, and things like that. So it's that rush to the door. The door is closing. You have 10 seconds to get out. Some people are sliding underneath that thing, right? That's what happens at the end. It's that mad rush to the end. Hope that helped you, Les. All right. I think we're done. Cool. Isn't buying zero debt companies best to buy with Fed raising interest rate? Well, Michael, I think it's always good to buy zero debt companies, and because they have a lot more flexibility with what they can do. When you have no debt, you actually will get better rates on any debt you're trying to acquire. So if things do slow down for your company, you can go, oh, I've got no debt, therefore you're less of a risk to the lender. So yeah, and in theory, you should be looking for zero debt companies. The reality is not a lot of them are zero debt. Right? Most companies have some debt. And yes, Big Eb, you're 100% right. Everybody here, not one of you should be in mutual funds unless it's in a 401k and that's the only investment vehicle you have. If you have an IRA that's self-directed, get out of mutual funds. Do it today, right? If you're in the Morgan Stanley Large Cap Growth Fund, you know what the Morgan Stanley Large Cap Growth Fund is? It's going to be the S&P 500. That's it. So sell your Morgan Stanley large cap growth fund, which probably charges you like 2% interest per year, plus a front end load, plus back end loads, plus all these management fees. They kill you. Buy SPY, which is a 0.019% fee or 0.09% fee, and you get basically the same thing, and you can buy and sell it during the trading day. Mutual funds you cannot, ETFs you can. All right, let me go into what's happening for tomorrow just so I can wrap this show up. There's a lot going on the economic calendar front. Not huge stuff for the U.S., but you can see a huge list overall. It's really about manufacturing and services PMI. And remember last week we saw really bad numbers from New York. The Empire State manufacturing numbers were pretty appalling, almost as appalling as the New York Giants playing this weekend against the Philadelphia Eagles. That was just a butt whooping there. Felt bad for the Giants. I thought they might actually do something, but Empire State manufacturing was awful for the U.S. What's it like for the rest of the world? Well, you have France, Germany, and the European Union reporting. You also have England. You also have the U.S. And the U.S. will be 15 minutes after the market's open. So that's an odd one, right? Market will be open 15 minutes, and if it starts acting really weird and wild, could be because those flash services and manufacturing numbers. You also have the Richmond Manufacturing Index coming out 30 minutes into the trading session tomorrow. You have some CPI numbers coming out for Australia as well as PPI for England, but that's going to be after market close tomorrow. Earnings. Here's the big stuff. Drum roll, please. We've got Microsoft, and I don't usually put this sign up here for this one, but since I like the graphic and I had fun designing it, your popcorn trade of the day is going to be Microsoft, MSFT. And we already looked at that chart. Here's the chart of Microsoft. Bring it up on a daily for you. And get rid of that volume. We don't need that at the bottom. Sitting down here looks like just straight chop. I wouldn't have a clue as to which way Microsoft is going to report tomorrow, and I'm not going to take that gamble one way or another, but it is happening after market close, which means there could be some wild action tomorrow. It's really one of the few that's reporting after market. Intuitive Surgical and Texas Instruments also report after market, but tomorrow morning, General Electric, Verizon, Johnson & Johnson, Lockheed Martin, 3M, and Union Pacific all reporting earnings, and there's a lot more than this. So keep your eye on big swings in the morning based off of some of these companies, particularly Johnson & Johnson, General Electric. I mean, those are very, very big movers and could have a big impact tomorrow. So that's it, my friends. My New Year's resolution was like 30-minute shows for TraderMerlin, and here we are at 52. I just can't do it. I'm trying my best. Anyway, if you like today's show, you know the deal. Give me a little thumbs up. If you're new to the show, hit that subscribe button. We do it every day, Monday through Friday. Well, usually every day, Monday through Friday. I'm going to have a couple of guests on next week. I didn't really get anybody planned for this week, so we'll see what happens. But if you have a specific person you want me to see or interview, let me know. Email me at tradermerlin@gmail.com or put your comments down below any of the YouTube videos. I will put those in the slides for tomorrow and answer those all live on the air for our Tuesday show. That said, happy trading, everybody. I'll see you tomorrow with a rundown of Microsoft and a fresh new AI-generated graphic to start the show. We'll see you tomorrow.